Hello and welcome to Business Today's Banking and Economy Summit Best Banks Award. I'm joined by Hemant Jhajhria, who's the partner head of Consulting KPMG in India. Hello sir, pleasure to have you here.
Thank you. Thanks for having me.
Sir, I want to start by asking you that what do you see that AI will transform in the banking sector going ahead?
So I think AI has come a long way from the days of doing simple POCs. We are seeing some large-scale implementations also happening across financial services, specifically into banking. One of the biggest areas is around efficiency. So for example, coding is a big area where we see large-scale impact. But it has moved from there to even synthesis of large amount of data. So customer FAQs or wherever you can resolve a whole bunch of, even internally or externally, looking at large amount of data and being able to make sense of it. And then there are areas where AI has deeply got involved in, for example, call center. As you make calls, to be able to make sense of the unstructured data that customers, all different calls that have been made by customers, and be able to make sense of it and feed that back into models is another large area that's emerging. So I think AI is going to have significant impact the way it is evolving. But one thing is sure, that there is always human in the loop in the way currently AI is scaling, which means AI throws out some results, but there is a human that's required to validate it. We will see the evolution of this space where AI largely becomes autonomous, but I think we are little, few years away from that.
What are the key challenges in the banking sector you're seeing?
So I think one of the big areas banking needs to evolve is banking was always a regulated sector. There were limited licenses, and the bank, you could become a bank only if you had the license, and it had there was a large value chain that banking captured, and typically banks made ton of money in two areas, lending and wealth, and then it made some money in other areas, but lending and wealth were two areas where it made a ton of money. Now if you look at it, how fintechs have come about, they have basically captured the front end part of that value chain, which is a lot more remunerative in terms of return on equity, because you are not deploying capital against it. So they have gone after the acquisition part of, they have gone after largely after lending and subsequently wealth management. So that's one of the challenges banking needs to see, how its value chain gets attacked from different angles by fintechs, for whom the entry barriers are lower than what they used to be 20 years back. Because you don't need hundreds of crores of capital to be able to open, like let's say 500 branches. You can start a tech-based area, just attack a small problem, and be able to still capture some part of the revenue over there. So that's one big area in my view. Now, how does banks respond to this? One, they need to realize that the proportion of digital sales is going to increase, and digital sales is different from digitization of processes, which is where they have been focused on. And how do you win in the digital sales area? How do you make yourself attractive? For example, public sector banks needs to think about how do you make yourself attractive to the newer generation of people. Our grandparents lived and breathed public sector banks, but our kids probably don't even, many of them have not even heard about it. So it's a one big challenge. They need to adopt more in terms of technology. So bankers need to be a lot more technology versed in the developed countries. We are coming across a whole lot of CEOs who are actually have come from technology background. So which is a new thing that, banking has to get itself adjusted to. And then there is this whole piece of how do you get your social responsibility managed, because there is a priority sector lending, there is whole the branches that you open, you still have to serve certain social segments of the society, and you have to balance the two, still remaining profitable, still being able to scale up. I think it's a very important challenge.
Lastly, top 3 key trends in the BFSI space.
So one big key trend in my view is the shift to digital sales, and that subsequently, so we started with the process digitization probably 20 years back. That moved to a lot more process automation, and then we are moving to digital sales and AI. And from here, there is a huge impact on something emerging called embedded finance, which basically means customers seamlessly move from one service to another without realizing there is a financial services component embedded in it. So it's like you taking an Uber or Ola and getting an insurance for something going wrong with your trip. It's bite-sized. It can be embedded nicely, and you don't even realize you are there is no inconvenience to the customer. There's no separate purchase experience for the customer. To my mind, that's going to become big over the next decade or so. And you're going to see financial services a lot more embedded than it is today. So that's one. Second, financial services companies have to adopt more to and think more like tech companies. So a great example is saying, how do you become digital? So you can take your existing businesses, take your existing products, put them into a digital world. Does that work? As well as somebody who's thinking from scratch on, I'll create an altogether new product only for digital space, create altogether new process only for digital space. That's what the Googles of the world do. And third is, banks are sitting on a huge amount of data. Look at the transaction data that the banks would have for you and me. What are they doing with this data? Because if you are Google and you have that amount of data, your valuation is like 20 times of any bank who has probably got more data. So ultimately, it's the confidence of what you are able to do with the data, and banks need to evolve more and more to say, we are able to get insights out of the data, that data, and execute in a way that we are able to create value for the customer and for ourselves.
Thank you so much. Thank you for those insights. Thank you.
If you like the video, do like, comment, share and subscribe.